markets are starting to price in a recession, even a crisis created by the self-fulfilling prophecy of collapsing global market prices. It's important to understand that what we come is from an excess of risk taking led by central banks printing money and cutting rates in a period of growth, leading asset prices to massively inflated levels that now generates a panic effect that no central bank, no liquidity injection, and certainly no government spending is going to change. If we look at global yield curves, what they're showing us is that the yield curves are flattening, even going into inversion. Inverted yield curves could be a sign of recession, not necessarily one a defining factor, but it could be a sign of recession. So we need to pay attention to this worsening scenario in which investors are taking more risk into sovereign bonds, and where we see the United States 10-year at less than inflation levels, therefore most of sovereign bond yields being below real inflation. If we look also at commodities, the slump in oil prices is a very defining factor of how global demand is weakening. We are seeing it also in copper, and we are seeing it also in iron ore. But it's very important to understand that even with a massive cut in production from OPEC, oil prices remain so weak. And the price war between Russia, oil prices, and these commodity prices were already weak before the coronavirus effect. Let's pay a lot of attention to these three factors. Thank you.